I'll have to be honest with you. First thing I'm going to mention right up front is it's free. I like the service when it's free because, you know, you can tie up a lot of money in different services, and from experience I found out that sometimes you can pay a lot of money and you may not be getting that much out of it.
Good afternoon, welcome to GrainTV. My name's Cody Bills. This is Brock Shimano. Today is Thursday the 15th, and we had the market trading sharply higher here today. Let's turn right over to the Firetip trading platform and see where we closed off the day here. Corn for December trading up 17 cents. Wheat in Chicago trading up 7 cents. Kansas City wheat trading up 4 1/4. And we had soybeans for the November contract trading up 26.5 cents today. A huge move for that contract. Brock, earlier on in the session, we did have export sales. Did they support this bullish move?
You know, I think it was supportive on the new crop corn and soybean contracts. Old crop wheat came in below analyst expectations, so not a real big story there. Old crop soybeans and corn both saw a little bit of reductions, but that's to be expected as we're in near the end of the marketing years for those two crops. But really the story was new crop soybeans, 1.893 million metric tons being sold for new crop soybeans. New crop corn, 836,000 metric tons. So big sales, well above analyst expectations there. I think it did give a little bit of support to the new crop contracts. We take a look at where we were standing for the old crop marketing year. Look at this chart here. We've been following all marketing year long. The red line is the seasonal pace that was adjusted actually on Monday to meet the current USDA expectations. You can see that last bar. We did see a little bit of reductions on the corn, but for the year we're still about 3 million metric tons ahead of that pace on corn. For soybeans, you know, the story has been all marketing year long that we've been well ahead of the pace, and that story continues, even though we did see a little bit of a reduction in the expected export sales for this year for soybeans. We're still about 35 million metric tons, 35 million bushels ahead of pace there to meet the current USDA projections. So old crop sales, not a big story. We're starting to wrap up the year here, but something we did get for old crop soybeans that could have been a little bit supportive was the NOPA crush numbers here. About mid-session we got those.
Yeah, we got NOPA crush numbers mid-session, and really, I don't think that they helped contribute to the rally. I think, honestly, the market had a lot of momentum here, particularly for soybeans in the last couple of days. It moved higher here, and this number came out really right within analyst expectations. The average guess was for the crush for July was around 116.4 million bushels. We came out at 116.338, so basically right on what analysts were expecting. So I don't really think it affected the trade significantly. One thing I did want to show you guys here, I talked about this on the morning call. I did say that about 1260, 1261 area was likely to be a resistance level. And let's just take a look at how we traded today. You'll notice we got up around that 1260, 1261 level, and we kind of hit our head there. We started pressing up against it. We tried it a couple times. We sold off a little bit, but we were finally able to mount that resistance level. And notice, once we were able to get above it, it had a role reversal right around that price level. We went, what was a resistance turned into support, and you can see we tested it a couple times by the end of the day. I think one of the reasons why this was a resistance level is because it was right at the bottom of this congestion right here when we were consolidating really back in July. I think that the likely scenario here is that we have another resistance level. I think it'll be around this 1280. It's a trend line. It's on the higher side of that same congestion. I wouldn't be surprised if we move up to the higher side and we start consolidating right around that trend line.
You know, we did see a little bit of minor resistance from the 200-day moving average, which was right around 1270 today. We did go up and test that level. We backed off a little bit, but you know, I wouldn't consider that a major resistance level at this point. If we turn our attention to the daily corn contract for December, you can see that we did meet some resistance there as well. We went up and touched the bottom side of that channel that we were trading in most of the winter during the winter this year. You can see we did go up 472 1/4 is where we closed. You know, we did go up, hit that. Didn't close above it with conviction today, so we'll have to watch that level tomorrow. If we do get some good solid volume above that level, that could really open the upside. to maybe take another run at the $5 level or so.
Yeah, I think, if we were able, I mean, really, like you were saying, right now we're at a resistance level, and then, of course, we're going to open up in the overnight session. It's going to be lighter volume. We're going to just have to see how we continue to trade right here. I think if we are able to get above this 472 with a little bit of conviction tonight, I think the next logical resistance level is this previous low of around right around that 490. I think that would be another resistance level before we get up to that whole number of $5. Other than that, guys, that wraps up today's GrainTV. If you have any questions about what we talked about, give us a call at 877-472-4607. Remember, there is substantial risk of loss in trading futures and options, and futures trading is not appropriate for all investors. Only risk capital should be used. So please read our full risk disclosure over at grainhedge.com. Thanks a lot for tuning in. We'll see you tomorrow morning for the Morning Grain Call.